Productivity in trading is not about the number of trades or the time spent in front of the chart. In this video, I'll show what productive trading looks like in practice, when I trade, when I don't, and why this is what actually brings results. We will go through real orders and decisions that directly impact consistency. Reminder, I have my Telegram channel where I share strategies and tips I use on the platform. You also get access to copying my signals and lots of useful trading information. Link is pinned. Subscribe, it will definitely be useful. Let's talk about productivity in trading. Productivity is not the number of trades or I traded all day. Productivity is having a clear plan, a limited number of entries, and knowing why you are entering a trade. I realized a long time ago, if I don't see a logical setup, I don't trade, even if the market moves. It's important to define a setup before entering a trade, otherwise it doesn't make sense. For example, I open a chart, see a currency pair. There's a downtrend. The price might correct now, but while the trend is clear, I mark previous levels and understand that at least the price will move towards them. I don't enter immediately, I wait for a candle behavior. I see a few consecutive good weeks and can enter a sell. A small pullback upward occurs and I open a sell. Done. I open and wait for further decline. I observe the structure, how strong and alive the trend is, check the trend momentum, wait for pullbacks to levels or mid-range and trade with the trend. I marked previous level and know the price will move there before a reversal. That's why I went with trend. This is important. The chart is clear and logical, a well-defined setup, and I follow it. You can see the candle is moving down, waiting for closure in our direction. The entry looks confident for now. Yes, there were pullbacks upward. I entered following the trend and expected to reach the bottom I marked. Some fluctuation occurs, but I expect a profitable close. So 4, 3, yeah. The story is clear. The chart moves toward previous levels, an upward trend was defined, and we entered. This is trading with a trend in a calm situation with clear logic. Just trend trading. I simply marked the levels and entered. When I don't trade, I consciously skip flat or choppy markets. Moments when you think maybe I can enter are skipped. Only when I'm confident do I enter. Sometimes losing trades happen, the market can fake a breakout. It's alive, unpredictable. But the key is to identify logic and not enter impulsively. Each trade costs concentration, increases risk, and affects psychology. Now I'll switch to another currency pair. I also check payout indicators. Good payout here, so we entered. Here I see consolidation. I also mark levels. After marking levels on the 1-minute chart, I check other time frames to see impulses and the bigger picture. I open the hourly time frame. There's a downtrend. Price reached the previous bottom, a possible reversal upward. That's why on the 1-minute chart we see leveling. I expect roughly to this level. There's an impulse and slight upward fluctuation. What do we do? I return to minutes. The price reached near the bottom, close to the extreme. Movement slows and I can catch a reversal. I wait for confirmation and strength before entering a buy, and I can open a buy. Now price is confidently moving to the marked level, so I can enter. Wait a bit. I open as the upward candle forms. The market is tired from selling and begins moving up. Very good entry moment. This is a counter trend trade. We identified the trend, waited for a moment when it starts to weaken, and entered a buy when the trend started to get exhausted. The key point: it's more important to identify when to enter. You don't blindly follow the trend. Watch candle behavior and mark levels. When price reaches a level, you understand reversal is possible. This is the basis of productivity, reading the chart and understanding how to act in each situation. With experience, as you see, we close in profit. With experience, productivity grows. I might enter another order. A good upward move starts, so I'll follow the reversal trend. Two confident upward candles. Remember the two candles rule. It doesn't always apply, but here we have a reversal because price reached a level. If the candles were lower, I would open a sell. That's why marking levels is important. I think now it will confidently move upward. Better not trade than trade without reason. Enter trades only when logic is clear. If there are no setups in a day, the market is unclear. It's okay, a day without trades is better than a day with losses. Make this a rule. Productivity means you don't get tired, don't trade on emotion, and don't try to squeeze the market. Great, we closed in profit. In the end, I want to say the main secret of productivity in trading is fewer trades, more logic, and a cool head. As you can see, we had 3 successful trades. I earned not by trading a lot, but by waiting for good moments. I identified good moments and profited, and now I'll withdraw. Reminder, I have a Telegram channel. Subscribe. Lots of strategies, tips, and access to copy my signals. Very useful trading information. I withdraw today's profit of 516. Continue. Money will be in my wallet in 20-30 minutes. In conclusion, productivity comes from a cool head, no chaotic emotional moves. Train on demo, start with small sums, master the tools, and you will trade profitably and productively. Glad you joined me. See you next time.